We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to have a look at gold and silver, but primarily gold. Now we've had a bit of a sell-off, we've had a bit of a panic with the Fed getting the tightening a little bit scary with the US dollar rising, and I just want to calm some heads down out there. This is pretty typical this time of year for gold and silver, and the big boys are manipulating the gold and silver price to their advantage to accumulate at a better cost average before a rally at the end of the year. It's my view. Let's just have a quick look at some background of gold at the moment. So here we have a gold weekly chart with some channels as prices moving through, and I just want to show off some seasonal patterns. Now, seasonal stuff is interesting, but it's not dominant. But for example, silver futures has a low in June, and it tends to rise from the end of June onwards, and we are currently in June at the moment. This is over 37 years. That's silver. And gold futures tends to bottom out between June, July and August. So once again, we're in the middle of the year. This is the summertime in the Northern Hemisphere. It tends to rally from the 1st of August, around the first part of August to the end of the year. So we're in the slump period for gold and silver. And here's the euro, which is the opposite to the US dollar on the DXY, because the euro makes about 50% of the DXY. So as you can see here, the euro bottoms around June-ish over a 30-year period and tends to rally to the end of the year, which means obviously implies a weaker dollar. So that's some seasonal information. Okay, silver bottom in June, mucking around between here and August. Gold, June, July, pretty slumpy, rally to the end of the year. This is the average over 30 years. Okay, I guess as you can see, you go to seasonalcharts.com to do your own research. So, what's going on now? A bit of a low in the metals, bit of strength in the dollar is pretty typical. I don't know if it's going to last 3 months, 6 months, or just 3 weeks. So, I've posted some Elliott Wave thinking into the RTT member site, RTT Plus, which implies it just may go on for a little time and start trending down. We have to wait and see, because we don't know. Consolidations can be a day or it can be 6 weeks, whatever. Okay, so that's your seasonal awareness. Now, if you have a look at gold, I want to highlight some behavioural patterns of the big metal. So let's look at this last top here. We're going to look at this last consolidation here. We had this important high there and an important low there. This is after the fact, so obviously this, we're wise here. So as you can see here, important high, important low, and we had another important low there, and we had an important point there, and then we had a breakdown, I should say. It started there. Okay, so that cycle period was relative to the time, and it showed good symmetry. Okay. So here we have an important low here. Once again, I see the important low there. I just draw a vertical line there so I can line it up. I'm drawing my T-theory time tool, which is just a basic, cycle tool. Here we had an important low and a major low there. And as we see there, when the cycle ended, when this period of time frame ended, there was a change in trend. So here we had a cycle, important pivots, and then we had a change in trend. Here we have an important base cycle of equal time, and then a change in trend. Okay, so what's going on over here? So let's just use the same logic. Let's not get too complicated. We had an important high here. We got an important low about there. Okay, so as you can see there, that correlates to another sort of minor important low there. So you would suspect, as history repeats, we're going to get some sort of action here and some sort of action there. So if this consolidation trend may create a low around, I would suggest, this is a weekly chart, we go a low until it, like as the seasonal chart suggests, a low until sort of like July-ish. Could be between the 1st of July and the end of July. You never know. It's not perfect. But a change in trend would be warming up coming into October, November. Okay, so if we get a low there and we see some trend, we want it to be bullish trend. Obviously, we want to see some bullish action. Here we had a high. We want a low here, because always, if we had a high there that was always a good point. That was a pump up to sell down. What we really want to see here is a smash down to buy up. Okay, this was definitely a top because we had a pump up, and you know, if you use Wyckoff logic, there was a up thrust after distribution, and then there was just, you know, obviously taken down here. So for a bullish case, we want to see a low around June, July. That is very bullish, and then we'll see the market move up, and hopefully we'll see a confirmed change of trend by, you know, in the weeks of October and early November. So very typical, very seasonal, and very predictable by the cycle. As you can see, this pattern here has the cycles are being manoeuvred by the big boys so they can get the best and the largest accumulations possible at the best cost price possible. So very normal. Unfortunately, we've got to go. It's now June the 18th, so we're probably going to have to go through another 4 or 5 weeks of bottom feeding on the support area. I don't think it'll take out this low here, and we'll get some bullishness back into the market probably at the end of the summer in the Northern Hemisphere. So that's some awareness in gold and silver for you. Thanks for watching.